We're talking about space AI and robotaxis. In the meantime, copper and other commodities, memory, and many other commoditized industries have generated a lot of wealth in the last 6 to 9 months. That's unfortunately the situation we're in right now, and it's very frustrating. The purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. And, we have a lot of positive, interesting, intellectually stimulating conversations here. This is not one of them. This is the exact opposite. This is exhausting and frustrating when you spend all this time that we're spending understanding the impact of technology, disruption, and new concepts, particularly artificial intelligence, which is the ability to generate, to execute and generate knowledge at scale, agentically. This type of the evolution is, of course, very interesting, but in the meantime, you take, for example, Lundin Mining, which is a copper company that we used to invest in 20 years ago. A good company. They produce copper. Antofagasta, another copper company. Their stocks are up almost. Their stocks almost tripled in the last, call it, 9 months. So while we have barely, we've made maybe 15%, 20%, something like that. Pretty pedestrian. And that's frustrating. And as an investor, you have to ask yourself a few hard questions then. Why are we doing what we're doing? The purpose of Orange Capital Partners is to generate wealth. It is not to analyze AI. It is not to have conversations with academics, business people. It is not to find the Venn diagram between science, technology, and business. So that's not the purpose. That's the goal. The purpose is to generate wealth. And we're not doing that well. And it's frustrating. And the question then comes up, what is going on? Like, first, why are all these other companies doing so well? There's no innovation whatsoever in copper. There's no innovation in memory. Very little. There's barely any innovation actually the most innovation in the chip sector is in compute. And NVIDIA is up maybe 40% over the last 12 months. And since September, October, it's flat, while Lundin Mining is up, whatever, 2x, 3x. So how is it possible that you have barely, if none, innovation, and here you have all this innovation? And well, the answer is in the price and the margins, right? The price of copper is $6. It was $4 9 months ago. That's almost 50% increase, actually exactly 50% increase. And in a commodity market, when prices go up like that, it's pure margin because the costs are, probably going up a bit too, but their costs is mainly the asset that they have, the mine, a little bit of operating expense, of course, but the mine is the main cost, and that is fixed. It's more like a house with a mortgage, and then if your rent goes up by 50%, you just make more money. So it's more like that. The same applies to memory. The same applies to turbine manufacturers for gas turbines. There's a gigantic secular investment cycle in infrastructure. When that happens, we have this move from all the way from the commodities up to any kind of equipment that is necessary to build the infrastructure, and the infrastructure, of course, being AI data centers. The problem we have with that is we missed this one, and that's very difficult for us to stomach because we actually used to do these types of macro trades back in the day, and I think this is a good lesson for everybody in the business. Don't forget what you know. Don't marry yourself to the current hype cycle. Keep your humility, keep your knowledge, and what you learned 20, 30 years ago could be useful, and this is one of those. Now, we want to take advantage of our knowledge of commodity markets and analyze the current situation. We're going to focus on copper here, but we could use memory, we could use memory blades, we could use stainless steel. There's many other commodities we could use. We're going to use copper because it's the most basic one, I think, and it's, Dr. Copper is always sort of the one that you can analyze the best. the point being, why is there so much demand? Well, there's so much demand because we're electrifying everything. And there's also so much demand because there is a race, an arms race in the AI space. So everybody's going to invest and keep investing. And that will, they'll pay any price, because if you pay $4 or $6 per ounce for copper, is not going to make a dent of a difference in your billion-dollar data center. But if you're 6 months behind in the model, in an AI model, that is going to make a difference. So then, of course, the question then is, well, should we invest then? I mean, obviously this is going to continue. And the answer is we're not sure, because there's two problems with this. Number one is competition. Commodity markets find their own resources. When prices go up, commodities start pouring out from everywhere. And we've seen this in uranium. We've seen this in copper. We've seen this in iron ore before. So these things, that's the one risk. So we don't want to be caught here in the hype cycle at the wrong time. But more importantly, I think what's really important is, even though you have the knowledge of, let's say, how copper works, the mission of Orange Capital Partners is to generate wealth by investing in fundamental new concepts and engineering practices. It's not to speculate in the commodity markets. So we have to also stick to our mission. We can change our mission. We can change the purpose of the fund. We can, potentially raise a new round of funding just for investing in assets, and that's a worthwhile idea. But as far as the fund is concerned, I think it's very important to stick with your guns. And I think I want to take a piece of knowledge here that I actually got from Elon Musk's companies. The way Musk runs his companies is that he's incredibly obsessed with error correction. And there's two types of errors. One that gets you fired, and the other that gets you supported. The error that gets you fired is when you're on the wrong path, right? When you're on the wrong path. So Starlink, famously, the whole management was replaced a few years ago because they were not they were not delivering against their strategic mission, and they were on the wrong path, and therefore they had to be fired. And the other example would be the early Falcon 9 trials. 3 of them failed, the 4th was fine. The management, which failed 3 times, was the one that succeeded the 4th time, and they weren't fired because they were on the right path. They just had to error correct. They had to iterate faster and get the solution. So the question now here is, are we on the wrong path? Meaning, is Tesla and NVIDIA the wrong investment? Or are we just in a sort of local error here that can be corrected? In other words, there's going to be a replacement cycle for the commodities. There's going to be more commercial opportunities for NVIDIA and Tesla. They're going to be able to produce earnings and profits, and therefore the stocks will do much better in the near future. That's the big question. We're sticking with the latter one because we believe that fundamentally the wealth creation is going to be with a physical AI company that is fully integrated, and that is Tesla, and then also the company that is best at delivering the best performance in token per watt and also token per kilogram, which will be the future in the future much more important. So those are the goals that we're pursuing with those companies, and we're in a local era right now, but not in a global era. I think that is very important. Thank you.